Welcome to the RLT Pivot Podcast, where each week we discuss a trading topic in a way that will provide encouragement, inspire growth, vanquish fears, offer solutions, and take you to the next level in your trading journey. So get ready as we dive in right now. And welcome back to another Pivot Podcast. My name is Tracy. I'm one of your co-hosts, and I am so glad that you could join us today. I am once again joined by the amazing Mr. Dan Jansen. How are you, sir?
I'm doing awesome. Good to be back once again, hosting the Pivot Podcast with you. A lot of people, and this is what we want to kind of get into and cover today. But a lot of people, they focus on probably more heavily on the technicals. They'll try to find a YouTube video that covers a certain setup. They'll cover videos on volume. They'll cover videos on different individual candles, Elliott waves, things like that, which are all important. But a majority of trading, and I think people that have traded, or if they're just starting to trade, they'll realize this too, where they'll make a trade, they'll jump too soon to get out, or they'll raise their stops because they're panicking, and then after they watch the chart, after they're out, they're like, if I just would have held, right? So you have that little bit of self-damaging quality to it, and a lot of that comes down to the mental portion of trading. The mental game of trading is a lot more important than the technical aspect, because even if you got everything down with the technical aspect, as soon as you start putting value on money, as soon as you start not playing the charts and playing your heart, you start to eventually you take what could have been good setups and good trades into something bad, and overall that would hurt somebody's P&L. Do you agree with that?
Oh, 100%. I actually love what you just said there. Play the chart, not your heart. I like that. I'm going to actually keep that for my own game for future. I love that saying. Yeah, and actually you and I are both mentors, and I would say that in my mentoring, the majority of the time, a lot of the issues that I'm seeing in the students that I'm working with comes down to the mental aspect of it. And it's something that gets overlooked absolutely 100% of the time. So I guess, in your opinion, what would be maybe the top 3 psychological kind of mental aspects of trading that would be extremely important to master as a beginner trader?
That's a good question to put it into a list of 3. I think the biggest one would have to be valuing the money. So as soon as you see the account balance move one way or the other, you bring emotion into it. That's why the algos, I think, are so strong, is just because there's no human thought process. Like, the human thought process was decided when the algo was created, right? So whoever created the algo, they said, for if this happens, then this happens. If this happens, then that happens. Where if you're a human looking at the screen, those charts could play tricks on you, and it ties into a little bit of the, or probably in a great way, the emotional aspect of you connecting what that dollar value does for you, right? So you have a little bit of a self-confidence issue when things are going in your direction and against you, right? That will play into how you then move your trade, or reset your stops, or move targets, or just never placing a stop in the first place, because everything will eventually come back. And I think that's one of the biggest aspects of trading is as far as the mental game goes, is just putting the value onto the dollar as what that dollar could do for you today. Whether I don't want to lose the money because I got XYZ bill, I want to take profits a little too soon because I got XYZ bill. When in reality, trading is about the process, right? Your job is to set your trades, let them play out, and I think that would be probably the biggest. The biggest complication I've seen when I'm dealing with the mentor groups, as far as what people struggle with. The other one is it's a little bit on the chart aspect, but it is more of a mental thing, is where to play stops. Because when you're looking to play stops, you're trying to figure out an exact point of, I don't think the trade's going to work if it breaks a certain point. Right, but when you're setting your stop, that also depends on how far that stock has to move in order for you to make 2 Rs. That also depends on like if you're wrong on your stop, you get stopped out, and then it moves in the right direction. So by placing the ability to place your stop, I think is a pretty important one. It does come down to a little bit of a skill of just trial error, seeing what works, what doesn't work, and then be comfortable with you getting stopped out, right? So if your original plan is to get stopped out at $100 on a stock price, just get stopped out.
Mhm.
As it starts to approach that stop, I've seen a lot of people, they'll cheat, they'll move their stops down a little bit. They don't want to be that person getting wicked. Getting wicked is never a good feeling. You're always like, man, I wish I would have just stayed a little bit lower. But again, that negates your entire setup, your entire plan. Even if you move your stop down and it reverses, you technically now need it to move a lot higher than your original plan was in the first place to hit those targets. So I think that would be a second one, is just kind of pinpointed when to play stops. And I think the third is the outside noise.
Mm.
So whether it's CNBC, other traders, stock twits, any of these communities, people on Facebook saying, do that, do this. They could say that as much as they want, but it might not fit your actual plan. So a lot of times you might be 100% in the right as far as your trade goes and your thought process, your setup, but you hear a lot of the outside noise coming in that says, maybe I shouldn't do this, and you start to listen to more of the outside aspect as opposed to just kind of following your plan. So I think the ability to kind of block what else is going out, or if you're in a Roblox trade but everybody's killing it on the Dogecoin, you might have the tendency to sell out of what you're doing and what's working to get into something that, with the hopes of being able to make more, or just kind of following the herd a little bit as far as what they're doing. So I would say those three would go into a lot of the mental aspect of trading.
Yeah. And I think those are all great points too. I want to go back to what you said about the stops, because I think that actually plays a lot into the money aspect of it. So one of the things that I do personally, and this was a change in my profitability, and that was choosing my stops first and then placing my trade around my stop, versus choosing my entry and then trying to make my stop fit my entry. That was a turning point in my trading. So before I would trade a setup, I would put my entry in here and say, okay, well, my stop needs to, I'll just put my stop here. And I didn't put a lot of effort into determining where that went. And what I see now is, a lot of people, they'll put their entry in because they're not really focusing on the stop at all. And then really where the stop should go, they move it up because they want a better risk reward. And really the idea should be place the stop first, figure out where the stop needs to be. As you mentioned already, where the trade is going to fail, you don't want to be in it anymore. You need to practice and figure out what that part is, and then fit the entry to accommodate where that stop needs to be. And if the risk reward isn't there, then you don't take the trade. You don't adjust the stop to accommodate that risk reward. But there's that desire, well, if I just put my candle or my stop below this candle, I can get that really tight risk reward. And they only think about the entry. They don't think about the stop. And part of that is also the inability to really acknowledge or recognize the potential that you could be wrong on this trade. And I think that's another aspect that, we hear this in real life trading all the time, that, go into the trade assuming that every trade is going to lose. And when you have that kind of mental switch, that enables you to start focusing a little bit more on where that stop might go to give you better odds of success, versus just focusing on your entry and whatever happens, happens. And you kind of go into denial about the potential of being stopped out. Does that make sense?
Yeah, 100%.
I'm hoping. Yeah.
Okay. I think the stop is hugely important. And again, I've seen people get into trades that they don't play stops, or I don't actually know what's worse, just not placing a stop or having a mental stop. I think they're running in the same category. So like, by getting triggered into a trade and not just automatically putting your stop out there, that leaves the human emotion wide open to play a huge factor into it. So if you're like, okay, I'm going to get in at 100. If it goes to $99, I'm out. As it starts to approach $99, you start feeling a certain way, like, oh, it could bounce, or you know what, this is a better spot. And then it becomes a lot harder to stop yourself out. Mm-hmm. Where if as soon as you get triggered in the trade, you're still feeling good about getting triggered in the trade, you throw your stop in at that point, And that takes a lot of the guesswork out, because now the only thing you could do, you should never lower your stop, is just increase the stop, right? Just try to lock in smaller losses as a trade hopefully tries to bounce in your direction. But not having a stop is a death penalty, and the manual stop is very, very difficult. It takes a certain kind of person to be able to really achieve that level of just commonality of being able to act on the original plan and not the emotion. So I don't understand why people would do,
exactly.
but I see that all the time.
Yeah. Now, the other thing that I wanted to go back on is what you talked about as far as the aspect of how you relate to money, I guess. And I would say that it's not just money, it's all financial terms. I think that you need to have a good understanding of what they mean to you. And one of them would be greed, right? Because I have several traders that have brought that up to me. They react a certain way because they don't want to be greedy, or they think that they're going to be greedy if they do this or this or this, or they did something in their trading and adjusted it because they thought they were being greedy. And when I have a conversation with them about what greed really means, all of a sudden their perspective changes, and it eliminates that problem that they were having with executing what they think they should trade and how they should trade versus what they're actually doing. Because there's a discrepancy in what the chart is showing you and what your plan is saying versus what you're physically or emotionally feeling. So I think having an opportunity to go through some of those terminologies and really figure out how they impact you and what they mean to you could be a life changer in the trading game anyway. That's my opinion. And then the second thing that I wanted to bring up regarding that is kind of what you were saying before, that feeling and emotion. One of the tips that you can get or use to remove yourself from that emotion that comes from actually trading money is to use the R system, or a variable system of some sort, which is the way that we trade. We use an R system. So it's a number, but it's a set number. We think in R's instead of dollar values, and that detaches us from the emotional value that we've placed on money throughout the growth process from a child to now. And that's one of the things that I think is highly beneficial. If you can take your mind, shift it, and start thinking in variables instead of thinking in actual dollar value, that will overcome some of those aspects when it comes to money. So those are two. Go ahead.
I think you're 100% right. I mean, the as far as the R system goes, you're still gonna have emotions during the trade, but you know where your max loss is, right? And if you're not comfortable losing that, then reduce that R to a level of comfortability until you get comfortable just following out the strategy that hopefully you've been practicing in back trading, and just repeat that process over and over again. I mean, there's tons of movies about traders out there, and they're all really exciting movies, and they're all making millions of dollars every 12 seconds that they're on camera. But in reality, trading should be if you're doing it right and correctly, trading should be very boring, right? Trading should be very monotonous and just the same thing over and over again. And if you could get your trading to that level of just, this is what I see, this is why I'm doing it, execute the trade. And if you could do that over and over again, you'll be very, very profitable as far as trading goes. The second you're in it to YOLO certain plays, you get the FOMO, you're missing out things, you're chasing things, you're just moving stops around. All of those variables is what ends up killing a perfectly good trading plan. So have the thought process that trading should be a little bit more boring than it is. It's exciting when you get triggered into something, it's moving in your direction. Like, that's fine, but you don't have to be in 100 trades a day. You could be in one trade a day. You could be in no trades a day. You could be in 2 trades a day. But as long as you're finding the setups that fit those certain plans that you've back traded and traded with, you should be very successful trading, and it should come a little bit easier over time. The more repetitive that you do it, because you're just seeing the same thing over and over again.
Yeah, absolutely. Now, one of the other things that I think is really important to bring up right now, as far as characteristics or personality traits for traders, would be the ability to work independently. Trading is an individual game, and it's very tied to your ability to make decisions, have confidence in yourself, and execute things on your own. And if that can take a lot of effort working through some of the psychology, especially when you brought it up earlier about the outside noise, having that outside noise there and not being able to make your own decisions or not being able to execute things on your own, you put those two together and you're going to be, wicked back and forth, constantly changing your mind. Somebody's going to say, I'm going to short this, and you're going to short it. And then all of a sudden you hear somebody saying, I'm going to go long. And then all of a sudden you get out and you go long, and you're going back and forth because you just are not able to get to that place where you have the confidence or even the practice of executing things or making decisions on your own. So I think that's another aspect that needs to be really nurtured or even evaluated before you even get into trading. Is this something that you're capable of doing or even that you want to do? Because a lot of people don't like that independence, right?
Yeah, 100%. It's you kind of go through life wanting to be the popular kid in school, right? Mm-hmm. You want to be picked for the football team, the cheerleading squad. You feel more comfortable in numbers, right? So I think a lot of that has to do with the ability to or the inability to really be out on your own trading something. But keep in mind too, you don't go to your butcher to ask how do I fix my car, right? Mm-hmm. Because they're two different things. So if a butcher gives you advice on how to fix your car, you're like, all right, cool, grain of salt. Figure out where the sources of where that noise is actually coming from, and also find out the time frame that they're on. Because if you're day trading something and you look good bullish on a certain trade because their setup's there, and this other guy is telling you, hey, no, this thing is going to go to zero, you both actually might be right at the very same time, right? You might be able to make your R's in that shorter amount of time frame, but he has a longer perspective on that trade. Mm-hmm. So it's possible to be correct in both senses of where it comes from, but in a certain time frame, one might negate another. So that's one thing. And then, you could definitely have, for the market to work, you have to have bulls and bears on every single trade.
Oh, absolutely.
Right? Otherwise, there's nobody selling anything. So if you're hearing from one bull, it's going to go long, and one bear, it's going to go short. Eventually, you got to make a decision of what you think it's going to do. And their plan might say, take this because of how they trade. If they're all trading the same time frame, same scope of the situation, but they might be looking at one certain criteria. You might be looking at another. So again, you have to try to avoid some of the noise. Even when I'm trading live in the rooms, there's setups that come in, and I'm like, I'm not going to take this one because of XYZ. It doesn't fit my plan. But if it fits your plan, I see what you're looking at. I understand what you're looking at. Having that ability to not put on the horse blinders and just only look in one direction, I think is extremely important, because you do want to open your ideas up, but I'm still not going to take a trade that doesn't personally fit my plan. Mm-hmm. Right. And they could take the trade and it could work out great. And I'm like, man, I wish I would have took that with you, but I really don't, because at the same time, it doesn't fit my plan. Like, I would love to have the bounce of the account higher because of the trade, but then I'm not following my own strategy. Mm-hmm. And I think that's extremely important.
Yeah, and it leads to other trouble down the road, if you don't. Yeah, actually, and today is an example of just that, right? I haven't looked at the close of the day today. I was trading this morning and I was done. But from what I understand, it was pretty much a bloodbath. Is that correct? Pretty much?
It was a very trappy reversal day. Yeah. And by the way, when you guys are hearing this, we're recording this a little bit sooner. But yeah, toward the end of the day, it was a straight sell. But it gapped up very nice in the beginning of the day. Everybody's all bullish, all gung-ho. And then the last 5, 10, 15, 20, 25, 30, 35, 40, 45, about the last hour, we sold off nonstop into close with strong selling all the way through. So yeah, it definitely reversed.
Yeah, well, even the stock that I took this morning, I took it long. And the next hour of trading, it already closed below the low of the day, and had continued lower. So the point being was that obviously there was some selling in the market. Obviously there were some sellers that were there ready to take the sell, and that happened. But I made a couple R playing it long. So that's kind of the point that, both people can be right, even though, whatever. Anyway, the market is there. Doesn't matter what you're doing. If it fits your plan, you can go ahead and do it, and whatever. There's going to be a winner and a loser every time. And yes, it is possible for more than one person to be right with a different bias. Absolutely.
Right.
On a different time frame.
So getting back to the example that you just gave of your trade today, because you followed your plan, you made R's on the plan, the setup was there. Yes, the market was bullish toward the beginning, but then it did end negative. So if you were in your stock and you said, you know what, no stops today. It's going to go higher. I'm not going to throw out targets. I'm going to wait for a 27-hour type trade. How do you think your emotions would be at this point? Like, because now you have shares that you felt great about today. Your plan was, okay, if the trade doesn't work, but if you were that person that took your stops away, you have a whole new situation to deal with tomorrow that you're just bag holding into tomorrow of, well, do I now wait for a bounce tomorrow? And then what if that bounce doesn't come? Like, how would your emotions, I know you got out, you took profit, but how do you think you would feel as a trader with that scenario of you not putting in stops today?
Terrible. I mean, I'll tell you, because I have a separate swing trade account from a day trade account. So I trade in my day trade account for day trades and it's closed out at the end of the day. And my swing trade stays open, but I have it on the same platform. So I can see the P&L on both of them. And so today I took my day trade, but I also saw that my swing trade account was up quite substantially. And by probably the next couple hours of the morning that went by, all of a sudden my swing trade account was down, almost three grand. It was down about $3,000. I saw that, and I know for a fact that I had this feeling inside that says I should just get out of everything. It's tanking. That feeling came in, that emotion came in. So I turned the computer off, I walked away, did whatever I have to do because it's not in my plan to sell. I'm following my plan. I'm going to stick to it. But I know that those emotions crept in, regardless of how I reacted to it. I know they were there. I acknowledged that they were there. And the difference between me now and me, 5-6 years ago, when I started to trade was 5-6 years ago, I would have panic sold or panic sold. I would have exited everything. Then it would have bounced and turned around and whatever. I wouldn't have followed my plan. So I know very well that had I not entered any stops and I found out, oh no, this is down, what's going to end up happening is I'm going to sell. What I would end up doing is emotionally holding on even longer, thinking, okay, it'll bounce. And then all of a sudden I'll reach almost a capitulation level for myself where I say, I can't watch this go down any lower. So then it continues to go down even further. Now I'm in a massive red zone. That's when I'd sell. And then it would bounce, return, and then head back up to profitability, which would reward bad behavior. Okay. Cause it would then tell me, hey, see, you should have just left it out. It would have reversed. And then all of a sudden now, next time I'm even more likely to hold that longer and not put my stops in. And it continues to create and reinforce bad behavior. And it's never good. It doesn't get you on the right side of anything because you're just chasing everything. And every decision that you make is after the fact or after you should have been making it, leading to consequences that are really hard to get past. And I've worked with a few traders over the last year that once you work through some of those obstacles of, just clear the bank and start from scratch and follow your plan and follow your rules, the weight's off them. When the minute they make that decision and they get out, they start to reformat or reformulate what their plan is, and they stabilize themselves and they get started again and they don't make those same mistakes. Trading becomes that much easier, and you can feel the weight of the world just lift off your shoulders. It's now better. That other scenario, it's terrible. It's terrible to watch. It's terrible to be part of. It's terrible to be in. You're kicking yourself. And then, like I said, when you start to recuperate from it, or when you start to make those decisions, things turn around, and it's just an emotional roller coaster.
Well, the decision that you're making, getting into a trade, is much different than if you did not follow your original plan.
Mm-hmm.
Because any decision you make after that point is a decision in a time of panic,
mm-hmm.
which could work to your favor if the stock bounces and you're holding. But even the stock you sold today, there's zero guarantee that stock will ever see that price again,
mm-hmm.
right? So we would think it would. I mean, maybe it's a bullish company, whatever the case. Maybe they'll do great in 10 years, but it doesn't necessarily have to, right? So if that stock just never bounces back, you become the bag holder in that company, right? So, and now any decision you make of, okay, maybe if it gets back a little bit higher, that, first of all, that little bit higher is usually still way below your original stop.
Mm-hmm.
You're just trying to fix a problem, but you're still making all of your decisions in some kind of a panic zone, which again, I like the fact of, you know what, if you have a bunch of trades in your portfolio that you didn't follow your original plan. You've been sitting on it for years, just waiting for something to come back. Yeah, maybe it's time to just empty those out, clear your head, clear your portfolio out, and just work on just reestablishing. Don't be so upset about taking a loss, even if it's a trade like before you learned to trade or before you really got more involved in the markets. You were just sitting on this position, again, probably because some fisherman told you should probably take this certain stock because the company's going crazy. And then as soon as you hopped in, that was after everybody else already made their money, and now you're just kind of sitting on it. I could guarantee there's people listening that have that same situation. Those companies, they might not ever come back. Like there's zero reason to be in that trade. You could take that money that's not lost in the market, claim the loss on your taxes, and be able to say, okay, I'm going to look for the better setups that I've learned about or setups that I like a little bit better because of XYZ, and then play that setup because your portfolio will accelerate a lot quicker than you waiting for the next 2-3 years for something that was just a bad play, something maybe seemed great at the time, just didn't work out. Things changed fundamentally, and be able to reassess and readjust your position. The other thing too yeah, go ahead.
I was just going to say that I know for myself, maybe this isn't for you, but seeing red in my P&L changes me as a trader, and I know that it changes me as a trader. So clearing that out, because I've been in situations where I've had a red P&L. And I've had things that I've been, holding or whatever, made mistakes. I've done that, been there, and it just plagues me. And I know that I trade terribly. Once I start changing the way that I trade and following my rules and doing everything that I'm supposed to be doing, and that's off the board, I've more than made it back. I've more than recovered from it, coming from a more positive perspective versus trying to fight out of the hole that I've been digging. And that perspective shift for a lot of people is challenging. And that's once you get there, though, I can guarantee that it's a lot easier coming from that fresh slate. You're just going to do everything a lot better, right? If you have the knowledge anyway. Yeah,
I agree. Yeah, we'll talk about morning routines on the next episode, but you want to be in a good mindset when trading. The reason being is just because you're going to make better decisions, right? So as soon as you open up your portfolio and you see you're down on the day because the market's coming down, your individual stocks went further down, whatever the case, now all of a sudden, instead of saying I'm going to be able to be patient and waiting for the right trade, you instantly get a mentality of I need to have catch-up trades. I need to push something a little bit harder just because I want my balance at the end of the day to be positive, right? And when you're trading behind the curve as opposed to playing offense, it becomes a lot. Your decisions are a lot less clear as far as what you want to do. And that's the same thing too. When I tell people in the group, they go, "Well, how do I know I want to be a full-time? Like, how do I know I can make it as a full-time trader? I have a great job. I have all this." And what I tell them is, it's important to know obviously how much you need to survive and live, but don't also put like if it's I need $2,000 a week to make a living. Don't put on the market, like don't put on yourself, I need to be in trades and make $2,000 on day trades, right? You could have swing trade accounts, you could have other avenues coming in, you could invest money in real estate. There's other avenues, but as soon as you set a certain dollar limit, like I need $500 this week, you're trading based off of a dollar that you want to receive as opposed to the setups. And that's the same. It's going to give you the same mentality of what we just talked about, of showing up and you're red on a trade, or you have those bag holding trades that just never ever go positive. You see that every single day, and psychologically that's going to affect the way that you're making your decision. If every single day you wake up, you're green in your portfolio, most likely you're probably like, okay, I'm going to trade so I don't lose money. I'm going to just wait, be a little bit more patient, find the setup that comes to me that fits my plan, and then I'm going to execute that, right? And oftentimes you're going to see a lot more positivity every single day by trading that way, as opposed to I'm down, I got to find something, the bell just rang, I need to be in the first 20, 25 seconds, and you're just doing things that you would not normally do under a more stable mindset.
Yeah, absolutely.
So I definitely agree with that.
Yeah, so we're kind of out of time, but I just want to end with a final thought, and that's just, if you're looking to get into trading, or let's say you're just starting, some of the psychology that I think is really important: overcoming fear, knowing yourself, discipline. You have to have an interest in the markets, because if you're not interested in the markets, you're not going to put the effort in that's needed to really get to where you need to be successful. You need to be an independent thinker. You need to be decisiveness, be able to make quick decisions on the fly under stress. You're going to need to be able to make those decisions. But in addition, I think you also have to have a good support system around you, because trading is very difficult. So whether you have some friends that have similar interests that you can talk to, or whether you join a community like Real Life Trading, as an example, where we have, several thousand, like-minded individuals that are extremely supportive and believe in a lot of the similar kind of strategies and what have you, that they can help walk you through it. I think those are the things that really need to be strengthened as a trader if you want to make it to the next level. So that's pretty much.
I know we're running out of time, but yeah, it is important to not ignore the mental aspect of trading. That does play a huge part of it. It's like you said, it was about 80% mental, 20% technicals.
Yep.
So it's exactly like an iceberg. The part you see, the part on the Titanic that people were seeing, that's the smallest part of the Titanic, right? It's the bottom part, the 80%, that sank the ship, right? So that was the part where the boat scraped against, and then the boat goes under. So if you're getting good at technicals, if you're understanding chart sentiment, all of that stuff, and you're still not having success, try to look within yourself as far as what the emotional aspect of when you were trading, why you're trading. See if you could change your morning routine, which is why the next episode is going to be so important. Change your routine so that you start your day in a positive way, that you're mentally in the right zone to make those trades. Because if you're not, or you have that losing trade, the next trade after it is very tough to come back on, because now you're kind of putting yourself down a bad cycle. So, but that is all the time we have. Appreciate you guys listening to us. Thank you, Tracy, for co-hosting. Always incredible to be here each and every week with you. Make sure you guys check out those links below to connect with us on Facebook, Twitter, or shoot us an email at tracy@reallifetrading.com or dan@reallifetrading.com. And we'll see you guys on the next episode.